Passive real estate investing, how to get started. Welcome back to another episode. If you enjoy this type of content, then subscribe and hit the bell icon so you never miss out on any of our latest and greatest uploads. Please keep in mind that we are not certified financial advisors. We simply provide informative and educational videos. Please do your due diligence when investing. If you want to build generational wealth by investing in real estate but don't want to deal with active involvement, passive real estate investing may be the right path for you. This quick guide will provide all the information you need to get started. When you think of a real estate investor, you perhaps picture someone who owns rental homes and manages their rental portfolio, finds tenants, hires vendors for repairs or rehab projects, and collects rent. This is an example of an active real estate investor. Passive real estate investing, however, does not require day-to-day involvement in the operations of a real estate asset. As a passive real estate investor, your role is to contribute funds to the investment, usually offered by a real estate group or syndication firm, while refraining from maintenance of that asset and its route toward profitability. Benefits of passive investing in real estate. Passive investing requires a lower time commitment. Between family obligations, hobbies, and a full-time career, actively investing in real estate is not realistic for most individuals. When you're an active real estate investor, it can be difficult to find the right deal, arrange financing, and put up with the hassles of the day-to-day management of a property. Passive investors reap the benefits of somebody putting that in place for them. And when a toilet breaks in the middle of the night or a unit needs maintenance, the passive investor sleeps soundly through the night while things get fixed. Further, less knowledge and experience is required to be a passive investor, as it does not require a deep understanding of the real estate market and the asset class you plan to invest in, be it single-family homes, apartments, retail, or other commercial or residential properties. Active investing would necessitate a thorough knowledge of the market in which you plan to operate, and the ability to distinguish between good and bad real estate transactions. Passive investing does not demand that you be an expert in real estate, as the passive investor leverages the skills, network, and expertise of seasoned professionals. Passive investing also offers great opportunities for risk diversification. As a passive investor in a real estate project such as crowdfunding or a real estate syndication, you may combine your money with other investors to buy a more significant, more stable asset than you could afford, or would want to risk purchasing on your own. As a passive real estate investor, you have the opportunity to invest in different markets and asset classes, and the ability to spread your equity across multiple projects, diversifying your risk. Getting started as a passive real estate investor. Joining a real estate syndication is an excellent method to begin as a passive real estate investor. Syndications are organizations of real estate investors that collaborate to acquire lucrative real estate projects, such as multi-unit apartment complexes. When it comes to real estate syndications, there are generally two participants: the general partners and limited partners, also known as its passive investors. General partners are active investors in the project, those in charge of locating and underwriting the property, their contracts, capital, and vendors. A limited partner in a real estate syndication essentially provides a portion of their capital to acquire the asset. Limited partners receive monthly or quarterly updates on their investment and passive income distributions. A theoretical example. Let's suppose there's an apartment complex that is going for $10 million. It's in a prime section of town, so it should be a safe investment. The general partners GP, also referred to as real estate syndicators, will work with a lawyer to form the LLC, create the business plan for the building, and model the returns to investors. In this case, the plan is to increase revenue and appreciate the property value. The GP needs to raise some funds to purchase the property and do a little value-add remodeling. A 20% down payment is necessary, so they recruit 40 investors to put $50,000 each for $2 million at a shared 70% ownership value, and kick in $1 million for remodeling costs. As a passive investor, you would look at the pitch and see if it seemed like something you would want. You would review the GP's business plan, which discussed 8% preferred returns, paid monthly for 5 years, and an endgame equity split. If the syndication hits the bare minimum, you will receive monthly checks of $333.33, or 8% times $50,000 at 12 months per year for 5 years, and then receive your share of the complex when they resell it to other parties. Let's say the GP holds on to the complex for 5 years. You would have collected $20,000 in monthly deposits during that time frame. Additionally, now the balance on the mortgage is $7 million instead of $8 million, and the property has appreciated 20% to $12 million. So when they sell the multifamily property, there's $5 million in proceeds, 70% of that, or $3.5 million, going to the 40 limited partners. Therefore, you'll receive $87,500. Over 5 years, you'll have collected $20,000 in rents and $87,500 from the property sale, meaning you will have more than doubled your money. Of course, there is risk with any investment, but passive real estate investing has the potential to be one of the most efficient ways to build wealth over time. It takes very little work, is scalable, and diversifies your portfolio into one of the safest asset classes, that of real estate. And with that, we've reached the end of this video all about passive real estate investing and how to get started. Thank you for watching. Don't forget to leave a like if you found this video helpful and interesting. See you again soon in the next one.